Are you struggling to put your take profits? Are you struggling where to put your take profits? Like, oh, the market's gonna go here or not? Will the market reverse from here or not? Because the take profit, what do you want mostly out of the take profit is where market to reverse after hitting that take profit or after hitting that target, right? So in terms of, we're gonna talking about standard deviation, one of the best ways to use it as a take profit, right? As a standard deviation, you take it out from the manipulation leg to the low, which we go over right over here. So go to 15-minute time frame because this was the 15-minute standard deviation. And to me, all time frame with both, so I'll take you to 15-minute, right? So we're gonna go on over how to use it, how to spot it. So the way you spot it and the way I use it, is from unicorn models, right? I only use it with the unicorn model. Why do I use the unicorn model? It works really well with the unicorn model. What does unicorn model require? A super liquidity. And what does a standard deviation require? A manipulation leg, basically a super liquidity, right? Taking out liquidity from the market, basically manipulating people out, taking out stops, then going back down, right? So what do you want to? How do you project this, right? Is you see this high and this low, and if you can see right over here, market this is called the manipulation leg, right? That right there, if you go on, pull it the bearish, right? That right there is called the manipulation leg, where the market took out liquidity. Or all else you could do is put a high. So what do we got over here? We got a normal high, we got a low, we got a higher high, then we got a lower low, which was over down here, right? Basically, it's doing a displacement below this low, which is called the breakout structure or displacement. Then you take out from this high that took out this high, the previous high, take it from the higher high, then put it to the normal low right over here, project it from there to there. Now this will tell you where should the market reverse. And in this second, let me give you guys the projection, the numbers. This is where you gotta copy if you want to copy mine. 0, 1, 2 point, negative 2.5, negative 2.4, negative 4, negative 1, and negative 2, right? These from the negative 2 to negative 2.5 is the most important one. The negative 4 is as well important. That's the max you could go, right? The max you want to go for doing this standard deviation projection. But I don't suggest using the negative 4. What I see often involves a lot of greed, right? Where like, oh, I'm gonna go here. Where should I go to the negative 2.5? Where you go over there, right? Where the market goes over there, right? So that's why I don't like to go for the negative 4. Only some scenarios, if it actually makes sense. During this time, it did actually make sense for it to go here because there's a what? Fair value gap. So one second part of the standard deviation is that you don't want to be just going for the negative 2 to negative 2.5. You want to be looking at the hourly chart or that whatever time frame chart, right, that you are in. Look like what is there that matches with the negative 2 to negative 2.5 to negative 4, right? What is there for us to match? What is there to negative? What is there to negative to the match to the negative 1? And by the way, this does not have to be perfect. It does not have to be correlated like to straight together, right? It could be far away from each other. It still be as one, right? So over here, it's a perfect example, right? These are not like correlating with each other, right? And this is still the 1. Why is it still the 1? They're negative 1 because they're kind of close to each other. They're not super close, but they're close to each other, right? For this, the negative 2 is close to this. The negative 2.5 is close to this, right? So you can put up here, and this right over here, this negative 4 is close to what? To the end part of this the 1 hour fair value gap. You could just take profit, right? This is hourly fair value gap. Usually people usually put their take profit at the middle, at the start, at the middle, and the end, right? So you take profit could be at the end, right over there, negative 4. They don't have to be perfect. Now, if you go back in time, we could give you guys more example. No trace here, so I can't really give you the example. Basically, I'll just back testing NFP recently. So right over here, another example could have been right over here, right? Go to a lower time frame, like 15-minute. Give us better look into it, right? On a 15-minute time frame. Right, this was the 5-minute projection, not a 15-minute, by the way, because I think I could access the 5-minute in here. Can I? Where the fuck? So on the 5-minute time frame, let me just put the bar replay to right there. So on the 5-minute right here, right, what do we have here? Is that our projection is going to be basically based out of this. Why it's going to be based out of this right over here. And why do I not call these? Because this one had all the steps cleared, right? I'm not gonna take out these steps. I'm not gonna take out these ones over here, any of these, because for the unicorn model, right? So I only use the projection with the unicorn model. If there's a new unicorn model, I will not use it, and I will, step away from it, right? But when it's step with the unicorn model like this, super liquidity, whether we had the manipulation leg, which was this right over here, this candle up to down here is all the manipulation leg, or you can just say a stop rate, or taking on liquidity. Now we got a low, we got a lower low. There's a bullish example, right? We got a low, lower low, high, then we got displacement above the high, leaving it out a fair value for unicorn model, right? It's a perfect unicorn model. And for the other thing, that this unicorn model is already getting created, right? And these other super liquidity I don't care about, because this unicorn model has all the steps cleared. He has step 1, he has step 2, he has step 3, all of them clear. So I don't care about these super liquidity, and I don't care about this, right? And you can see, what did the market do? -2 matches with this liquidity right over here, right? And you could say that -2.5 is close to this, but you can see over here on the, and I have a take profit rule where if it hits TP1 and the 15-minute time frame closes below it, I will get out that position, right? Where was it? So I'll get out full position out of here, and guess what I did right over here? I would have got a position because the 15-minute time frame closed below the take profit, and if I would have held that trade, I would have hit TP, but it would have been break-even trade, because a lot of people usually break even, right? Catch their profits. But if you would have held it, you would have to the -2.5, you would have made more money. But the greedy is not the point of this. The point of this is to not be greedy, right? Even using the standard deviation, the -4 point I don't like to use because it involves a lot of greed to me personally. But other than that, if you can go more, you can show you guys more example of just backtesting NFP days, which I was looking which days to trade, which will not trade, right? But I'm clear on all days. Thursday and this Friday just kind of right? So last NFP, which was this couple of weeks of NFP, okay. Right over here, this trade right over here, you can see there's a 15-minute example, right? Another 15-minute example. We gave you a 5-minute, we gave you a 15-minute, now there's a 15-minute again, right? We got a what? Super liquidity. This whole thing is a manipulation leg, right? Where just to down here as well. The manipulation leg is over here. Now looking for the last bullish candle. We got a low, lower low, high, and it's placing above the high. So a higher high, right? And this one did hit TP eventually. This trade would have been a break-even trade because market closed above it. But what the projection do? You're taking a projection from the low, you're taking a projection from the lower low to the high, right? What did the market do? Go to the -1, and then what did the market do? What was the reaction of the -1? Market push right back down, right? So this gives you a clear take profit on this -1. There was a bounce of liquidity, right, in the early time frame. Eventually the market did go to -2, but people don't want to hold to that long, right? They want to get in, get out. And this one, guess what? This we did. This entry right over here, this unicorn model, as I said, it looks really well to me with the unicorn model. Unicorn model giving the entry, boom, TP right over here. And eventually, if I would have held that, I would have had a stop loss. But let's say TP, right? Then eventually, guess what the market do? They go still up, but as I said, people don't want to hold that long, and you don't want to be greedy on doing this shit, right? So let's go over more examples. We have more examples over here. Do I have any more examples? I have one more example right over here, another projection, which was from what time? You see right over here on I think this is the 5-minute time frame, which I had my projection on this. What is the 5-minute projection? Yeah, this was the 5-minute, right? Oh, that's not that one. It's this other one right over here. Gotta keep on doing this ball replay shit to get to reach that price point. So in a 5-minute time frame, you can see what do we have over here? We have a super liquidity. This right here, this whole move down is a manipulation leg, right? This whole move down to the here is a manipulation leg. We're taking it from the low to the low low. Then we're taking it from the lower low to the high, right? Then we got a displacement of the high. Then we got an entry there, sell side below this, right? Below the breaker block. Now we're looking to aim for the -1 to -2.5, right? And what do we have to the -1? So the -1, we have a Boston liquidity. It doesn't have to be perfect. As I said, it doesn't be perfect, but it has to connect, right? It has to be perfect, but it has to make sense. It doesn't have to be perfect. They're close to each other. It makes sense. Go for it, right? This TP1 right over here. Right over here. This high right over there. TP2 is on the hourly time frame. Right, what do we have in the hourly time frame? That's over here. That matches, that is matched with that. Where the fuck was it? No, it was back here. Back more. Oops, wrong one. Okay, so what is the -2 is matched with? The -2 is matched with what? Perfectly matched with this Boston liquidity, right? This Boston liquidity right over here. Perfectly matched with it, right? So a little bit above it, match with it. So they could have used that or the take profit. You could have gone for more, which would have been the -2.5 right over here. You could have gone for that as well, but I'm pretty sure they sort of told us to get out. See, you could have held it till all the way to -2.5. Now go to 15 time frame and see if we actually would, if to see if we actually would have held to that take profit, right? Right over here, to the -2.5 would have now held only to -2. Right over here, boom. And this you know, it's still inside the zone, so we could have used that to take profit too. But the market did eventually go there out of the -2.5. What did the market do? React down. And yeah, and one thing I make sure about these is that the -2 to -2.5 are always usually cause a reverse, right? It will cause a reverse on the position where the market will retrace, right? And if that -2 to -2.5 gets pushed through, you price usually likes to go to -4, then eventually, you know, react out of it. You can see right over here. So thank you for watching. This is, if you got any other video suggestions, this is how you could have your profit targets really well by using standard deviation. What I like to use it with is unicorn model. What a unicorn model, I don't like to use standard deviation because the way I enter is out of unicorn model. And thank you for watching.